All right, what is up, ladies and gentlemen? This is Alex, aka Whale Hunter with Boss Crypto, and today I'm going to be bringing you guys a little updated video on the candlestick setups I did a few weeks back. I had done it on my laptop, and the cursor was kind of laggy. It was just a little shoddy, a little slow for me. So this is going to be hopefully a little better, quicker, updated version of that. And I'm also going to show you guys how to set up the stochastic I use, because that is our time component of this model, and trading price without trading time is very difficult, if you ask me. So I use a slow stochastic. You can either type that into indicators, slow stochastic, or you can change the settings yourself on a regular stochastic to 10 for the length, 5 for smooth K or percent K, and 3 for smooth D. And that should already be that. 10 will probably be 14, 5 might be 3, but these are the settings I use to have a smoothed out, nice cyclical rhythm to our price action. Okay? And so once you've got that set up, let's start looking at price, which will give us our entries to use with our time component. So the first one we're going to talk about is the bullish and bearish engulfing candles, which I will circle examples of. Right here, there's a bearish engulfing, and here is a bullish engulfing. So an engulfing candle, basically, for the bullish side, if you have a red downward candle here, a bullish engulfing is where the close of an up candle will be above the open of the previous down candle, right? And we can see that here where, right, if we think of these candle opens as lower highs, right? We have a lower high there, a lower high there, a lower high there, and a lower high there. And then this candle closes, it engulfs the previous candle, right? And this is an entry sign, and our stop loss for that goes below the previous candle. So boom, our cycle crossed back here. That was a sign to take some profits. We had a bearish engulfing candle where this candle closed below the close of the previous, which is not, was not very hard to do. And then again, a big sign is when you break that 8-period moving average or exponential moving average. But at that point, we were waiting for a candle setup and a cycle cross to re-enter. And again, another good point is when you get below this 30, you definitely start looking for longs when you're in an uptrend. So this just lined up really well with all of that. You can buy preemptively down here below the 30 if you like, when your cycle is getting nice and low. But the safest thing to do to avoid buying something that's going to fall through, the safest thing to do is wait for a candle setup, wait for your cycle cross, and enter there with your stop below. And then you're taking profits into old potential resistance. And you're waiting for a reverse candle setup to take you out of that trade. All right? So I had them all typed up. I keep deleting them, but we'll just go through them as we do it. So we had bullish and bearish engulfing. Now, bullish and bearish engulfing candles do not have to happen right after the previous candle it's breaking, right? So here's a good example of a bullish engulfing that comes after several candles after the lower high, the open of this candle, right? So this would be a regular bullish engulfing, and this is what's called a delay bullish engulfing, where you have price taking several candles to get above, to engulf this candle. Oops, didn't mean to click fib. So this on its own is not a bullish engulfing candle. It is partially a candle setup, but it's not a bullish engulfing. You have your cycle cross, and then this was your sign that really said this was engulfed and the trend reversed. So if you guys also, this is a really important part here, guys. If you ever miss a candle setup or you feel like you're late, right? So the actual bottom of the candle setup was, 36, 37% higher, or sorry, the the actual confirmation of the candle setup was 37% higher than the bottom of the original candle. So if you can start a position there, but you can't add a lot of size because you might get the pullback. If you get stopped out, you're losing a large position there, a large piece of your portfolio. So I like to buy pullbacks halfway. Once I see a candle setup, that's a sign not just to buy, but to be buying pullbacks, right? If I get a candle setup in the opposite direction, that's a sign that I might want to be shorting the next pullback, right? So in this case, we had a delayed bullish engulfing. So now I want to long a pullback about halfway. That is where a trend will tend to hold. And that is always where I start buying, halfway back. And look where it holds right at halfway. Another place I find holds a lot that I buy is at the 0.618 and the 0.786 pips. These two I find hold the most often, with the 0.5 being the most often. But I always save a little bit for the 0.786 just in case you get the opportunity. And try and think of it as like a triangle. Like if you're putting 5% of your account into this position, maybe you want to add 1 or 2% at the 0.5, 1 or 2% at the 0.618, and then save another piece for the 786. So you can get a nice average in the middle here. So you're not just all in up here. Or if you like, you can even go, do 1% at the 0.5, 2 at the 0.618, and 3 at the 0.786, and kind of ladder them down like a triangle. Whatever works for you, but you want to make sure that you're consistent with your stops. Right? And so even if you're entering up here, if you have a really large stop, that's a 30% drop, you got to keep your size light. And then sometimes you'll just get the really nice setups where your stop can just go right below the previous candle. All right, so you'll see me talking about buying halfway a lot, so I just want to make sure that gets said. So we had the bearish engulfing, bullish engulfing, the delayed versions. Next up, we'll talk about bottoming tails, which are large wicks on the downside, and topping tails, which is the same thing on the upside. This often is letting us know of exhaustion in the markets, whether it's from the sellers or from the buyers, one way or the other. These will often line up, or rather we want to pay attention for these when they line up with our cycle crosses. So if we're seeing a big bottoming tail here, at the, after a large move down, not just in price action, but also in time, that's a good buy indicator right there. Likewise, on the upside, when you've come up a long way and you're starting to get a lot of topping tails, like that, especially after your cycle is crossed over, that's a sign to be taking some profits and a sign to be getting out. And the stop is below the tail itself if you enter on that position. But the real entry for topping and bottoming tails comes from takeouts, which, that would be a topping tail takeout and a bottoming tail takeout. So basically, when you have a exhaustion like this big topping tail, this is now a pivotal area. And so getting above that, which this candle closes above that level, is really important. So you can have you can enter a long based on that, and your stop goes below the previous candle. Because this is showing that the buyers had enough power to get through the level that previously the sellers took over. And the same thing goes in the reverse direction when you get a large wick like this, and then price action comes to the right of it and just takes it out. That's a really bearish sign to get a bottoming tail taken out. Which this whole move is essentially the delayed version of a bottoming tail takeout, right? Where this was the bottoming tail, it tries to hold it here, and then it gets taken out, rejected over here, and does not come back. That's kind of a shoddy example, but that's the idea behind it. So those are bottoming tails. Those are topping tails. Next up will be bullish and bearish candles ignored, which we'll go back to this topping tail for that, because at this point, that is a very bearish candle, right? We have come up very high cyclically. Hold on. Pardon me. We have come up very high cyclically, and price has also come up extremely high, and then we have a huge topping tail in this move. We don't break the 8, which is, one component of the model. Bull trends often hold the 8, as we can see this do many times going up. So this is a pretty tough sign. And then over a series of candles, this is taken out, right? A topping tail takeout. So now this candle becomes what's known as a BCI. So this was a bearish candle, and this is when the bearish candle gets ignored by the trend, right? So bearish candle ignored. BCI, bullish candle ignored. Same thing on the way down, okay? When price is going down, right? 1, 2, 3 candles down, an attempted hammer reversal. Because at the time, this was still a bullish trend, right? We were holding at the bottom of the bands. Cycle was coming down, attempt to reverse, and a bearish engulfing right below it. This is a potential short entry. And then your stop goes above the BCI. So if you short there, your stop goes above that level. Same way in this level, if you're longing above this, whether you're treating it as a topping tail takeout or a BCI, your stop goes below it. Now, if you're entering when it actually breaks out, you're pretty far from your stop. So if you're entering based on the topping tail takeout, then you could put your stop below the previous candle. But in a situation like this where it's just a BCI, your stop goes right above it. All right. So we got bullish, bearish engulfing, delayed bullish, bearish engulfing, topping tails and bottoming tails, along with their takeouts. We got BCIs. BCIs tend to be halfway up a trend leg, by the way. That's something else you'll notice. We have an up leg here, a big BCI, and then another huge uptrend. That's pretty typical in the model. All right, and then here you'll have a leg down, an attempt to reverse, and another leg down. Not quite halfway, but it tends to be pretty close. All right, and the next one we're going to talk about is known as the real money candle, or RMC. And this is a term that was coined by the guy I learned this model from. His name is Jason Jenkins. Basically, a real money candle is a candle that is bigger than any candle around it and shows real money coming into a market. And this is also a buy or sell setup. You can have these in the bullish direction, and you can have them in the bearish direction as well. So this was a buy setup. Stop goes below the previous candle. And as we can see, this real money candle gets a lot of follow through. This negative candle gets a good bit of follow through. All right, and same with this is a real money candle. On the bull side, these two are both real money candles. This was a real money candle with a huge bottoming tail. All right, and that's another setup. When they're really large though, if you're trying to enter here after a real money candle, you don't want to have your stop down 15%. A good place to put a stop is a little over halfway down that move. So if you expect that candle to hold about halfway, I'd have my stop like, maybe 60% of the way down, 55%, something like that. Or you just enter a really light size so that if you get stopped out, if this is a 15% loss, you want to make sure your size is small enough that the actual loss on your account is not that large. As opposed to if you're entering, you know, if you caught the bottom of this trend based off this bullish engulfing here with the cycle cross, your risk is a lot less. Your risk is a lot tighter, right? Your stop's right there. You enter right here. You get a pullback after to add on with another bullish engulfing. Now, the guy who added here can also add some more here, but the guy who only adds here now might have to, you know, have a little tighter stop or just use smaller size. Okay, so that's the real money candle. Typically, you will see follow through after a real money candle. Just like a BCI tends to be the middle of the move, that's another thing you tend to see is follow through after a real money candle. All right. So we got the bullish, bearish engulfings along with their delayed methods. We got the topping and bottoming tails, real money candle, BCIs. And the last one, and the one I use most often and see most often, is known as the swing line setup. And basically what this looks like is if you had your series of down candles, like in this section, where you have lower high, lower high, lower high with the candles, right? Lower high, next candle's a lower high, next candle's a lower high, next candle's a lower high. And then you get a candle that takes out the previous candle's lower high. That's a swing line setup, and your stop goes below the previous candle. That's a bullish setup. And then in the reverse direction, when you're making, you got candles making higher highs, higher lows, higher lows. When you get a red candle that takes out the previous candle's low, and that's a bearish swing line setup, and your stop goes above there. Again, we're trying to line these things up with the cycle. Okay, so the cycle crosses, cycle crosses in here. We're looking for candle setups, right? This is an attempt to bullish engulf this. Doesn't happen. Bearish engulfing right here. Bunch of topping tails, showing some exhaustion, not even able to get above the 8. More exhaustion from the buyers until, but this is a pivotal point because this candle closes above the previous candle's open, which had not happened at any point in here, right? Look at this massive BCI right in the middle of this downtrend. Huge leg down, a breather, and then another leg down. But this swing line setup, even though it has this topping tail, your cycle had crossed and was already rising. Excuse me. So that was your first sign to be in this trend. And then your stop goes below this previous candle. Okay? And then afterwards, and there's your leg up, right? All the way to there. You get your pullback exactly halfway. Opportunity to add more. Stop still goes below there. And then once your cycle gets pretty high, you're starting to book some gains. And you're waiting for price to tell you that this is over with. And here you get basically a 3-in-1. You get a bearish engulfing, a bearish real money candle. You know, that's much bigger than every other candle that we can see here, going back to a couple of these. And it's bigger than all these, actually. So you got the bearish engulfing, you got a bearish real money candle, and it's a swing line setup. Right? You know, here's your trend forming higher lows, and then boom, gets taken out with the cycle cross. Right? That was just a huge sign to take some profits. And then anyone who wanted to short based off that, your stop is above there. And this would be a good example of where if you're shorting here, you probably don't want your stop to be all the way up there unless you're just using small size. You might want to have it like 60% of the way up. Just because, you know, if you buy something here, your stop loss is what, 10% above. Maybe you put it 5%. It just depends on how you're playing your size, really, on that one. And then same thing, you're waiting to re-enter to see if this pivot's going to hold. You're waiting until you get a bullish candle setup. right? Which lower high, lower high, lower high, lower high, lower high, boom. Candle setup, cycle cross. Bang, bang. And then here's our higher lows, and bearish engulfing right there. Daily cycle is still rising though. And then we get a nice bottoming tail right off the bottom of the current support zone. So maybe you had a really tight stop there and you get stopped out. Totally okay to re-enter when you break out above, say, this topping tail range, right? And then your stop can go back below somewhere in here. Okay, it depends on how you're entering. If you had a tight stop and you get stopped out, that's okay. You can enter after this closes, a bottoming tail, or you can enter when the major upper pivot, this topping tail, gets broken. You can enter on this candle, and your stop goes below the previous one right here. All depends on how you break it. All right, so that's the one I use the most and the one I will see the most. We'll go through some more examples of the swing line setup. All right, if we'll go real quick. We'll just go down from 20K and see how we could have played this, analyzing some candles. Okay. So the bulls hold the 8 all the way through November and December, leading up to the first big breakdown right here. And I remember the creator of this model was telling us right at 17K, big sign to take some profits, because after this huge cyclical movement up, not just in time but in price, it finally broke down. Not just in price but in time also. So that was a huge sign to take some profits and potentially enter some shorts if you were doing that. But from the direction of our bands, we know this is still an uptrend, so shorts have to be a little careful until this was a confirmed downtrend. All right, so taking some profits there, looking to add back below the 30, which is right here. So maybe you buy some back down here, or maybe you wait till this is a big wick. Okay, and then again, I'm trying to stay consistent with the time frame and stay here on the daily, but on like a 30-minute, this would be easier to measure. You want to buy this pullback, right? This bounce up from here to here. You want to buy that halfway because this was a bullish hold. So I'm a buyer back here, and I'm a buyer at the 618, and you almost get a shot at the 786, but not quite. But I'd be a buyer at both places. I would have been a buyer at the bands, and you get a cycle cross with this bottoming tail and a bullish engulfing setup. Price fails to hold above the 8. Like I said, I'd be a buyer on this pullback. Your stop goes below the current major pivot. Nice topping tail breakout here. You could definitely have bought some there. I'm sure tons of people got faked out. And then your stop is below the previous candle, which would have taken you out 2 days later. We've got a down cycle cross right here with a bearish engulfing candle setup or swing line setup, however you want to see this. All right, boom. This takes out. That's a short signal or a take profit signal, however you're playing it. Stop goes above there. Break down below the 8, taking some more profits off, maybe adding a little piece back with at the bottom of the bands into this area. Your cycle's still coming down at this point, so you got to be a little careful there. You're contrarian until you're on the right half of this, right? And if this is our cycle, this is the left half of the cycle, and now this is the right half of the cycle after you have crossed. Okay. So playing a little careful here. This was a BCI after this bearish engulfing, so that's why another reason to keep your size light. Nice set of bottoming tails there. Failure to get above this bearish candle, and rejection at the now descending 30 and the 8. Not a good sign for the bulls. Bearish engulfing on this candle, and then bottoming tail takeout right there. Not quite a full takeout of the major pivot. You can see I'll use a full-on rave for this. Price attempts to hold this many times. Very pivotal level. So with this cycle cross and some bottoming tails, this is actually a good opportunity to pick some up. Or you wait until the bottoming tail candle gets its high taken out or its open, which is right here. So that's another good entry. Stop below here. Take some off at the 8. This is a big thing. When you break down your bands like this, and you're making higher lows, higher lows, higher lows, and then you break that, you're still making higher lows long term, right? This is still a higher low relative to here, but you kind of got to switch that mindset a little bit and start recognizing that you made a lower high as well right here. And so now you kind of got to switch from just buy the dip mode to a little heavier sell the rally mode. So when you're buying a dip like this, after you break down a pivot, you got to be a little quick to take profits. So if your stop here, if you're entering from this candle and your stop is 22%, you need to be taking profits right at the 8, enough of your position to try and make up for that. If that makes sense. And then you're taking profits again when you get to the 30, above the 30. All right, let's see how price holds. Buy back halfway, buy at the 618, buy at the 786. Take some off at the 8 throughout here. Price doesn't even make it to the 30. Everything gets stopped out here. Swing line setup right here, bullish engulfing, stop below the low, get stopped out. Huge bottoming tail off our pie line with the bottom of the cycle. A great setup there. Safe move, if you like, is to wait until the high of the bearish candle gets taken out, which it does with this candle. So if you enter on this candle, your stop goes below the previous candle. If you enter on the bottoming tail, your stop goes below there. Or maybe you waited till your cycle was already rising. Maybe you entered on a bullish engulfing here. There are plenty of opportunities. This is a BCI, bullish engulfing right there. And then we get a topping tail right into the lower high where we broke down to 6K. Another sign to take some pretty heavy profits. Topping tail with a cycle cross. And then you get a bearish engulfing right after. You close below the 8. Looking to hold this halfway. And it looks like it does hold halfway. You get a bullish engulfing. Your cycle was low, but not quite crossed yet, and you fail right at the 8. That's why you always take some small profits at the 8, especially when you're in an intermediate term downtrend. Sorry, thought I heard my cat. All right, we get a double top here. Just another thing to point out. Your cycle eventually crosses up here. You get a nice bottoming tail and a bullish engulfing setup here. A good place to buy. Stop below the low. Little set of topping tails. Maybe start to book some small gains. And I do mean small gains, 5-6%. And then the downtrend continues. This was just another lower high, BCI, about halfway down. Boom, cycle crosses up. Swing line setup, bullish engulfing, stop below the low. And then after this time, you finally catch a nice move. You can also buy halfway, right? So this was your bounce. Be buying in there, and there, and there. Stop goes below the low. All right, you guys following along pretty well here. The goal is to buy when your cycle is low after a candle setup. You won't always get cycles where you can buy perfectly right here and sell perfectly right here every time. Neither will this be, a higher low every time, a higher high every time. It never works that way, right? Like this was buying low in the cycle, but you were not buying the low. you bought low, but you have to come out of it on your next upcycle because not enough time had played out yet, and price was not done. All right, if we were to go look at a monthly chart, for example, we would see that not enough time had played out yet. That's what we're really waiting for in this bear market right now, looking at Bitcoin. The bear market ended in 2015 when enough time had played out, right? And now we're getting there, but we need to cycle it across to show that time has played out. All right? So that is just a little helpful example for you guys. I hope that this candle setup was a little quicker, a little better than last time. If you guys have any questions or comments, feel free to post them in the comment section below. I appreciate you guys' time. Hope you guys learned something today, and I hope you all have a good week. This is Alex. Talk to you later.